As the UK temperature reaches record highs, signs are slowly starting to creep in that the heating multiples sellers have been experiencing in the mid-market may be creeping to an end. Deal volumes typically drop in the summer months, and this remains consistent in our sector, with only capital markets showing real signs of trading weakness and a fall. However, the deal volumes as we enter 2023 could really set the precedent for what we expect in the coming 18 months. Consolidation in the ICT space remains strong, with our Christmas card list of trade acquirers carefully making synergistic acquisitions to further their competitive edge. Despite a slight downturn in the mid-market, private equity is showing similar confidence, with the recent sale of Beechtree-owned BCN Group to ECI Partners for an estimated $125 million, making particular headlines in our space. While there may be perhaps indication for longer-term concern in the wider mid-market, in Evolution Capital's area of focus of the lower mid-market, where turnover ranges between £5 and £50 million, there's real buoyancy in the space and certainly enough action to excite both buyers and sellers. Despite the macroeconomy, investors are still carrying a healthy amount of dry powder, and this is despite the flurry of activity last year and in the closing moments of 2020. This means that while seller's market is a term which is coming through thick and fast, it is allowing acquirers to be more considered when looking at their potential acquisition targets moving forwards. This factor is driving sellers to assess their options in far greater detail, with the broker model, where deal completion rate is typically 1 in 5 at best, no longer offering a remotely attractive proposition, and instead shareholders truly looking to maximise their advantage are taking different action. Instead, the more consultative approach of the advisor is taking true focus, allowing shareholders to gain an objective overview and insight into not only their positioning in the market, but also potential valuations which may come through as the result of any transaction. This insight truly allows shareholders to explore all the options available to them, whether it be a programme of structured organic growth, an M&A programme, or indeed an exit. The value added by the advisor truly comes into play through meticulous and methodical structuring advice and preparation, and often involves problem solving as just a greater part. The level of activity of course depends on the subsector these businesses operate in. SaaS is continuing to drive high deal volume, though of course this should not be confused with deal value. Cybersecurity of course also striving to make great waves for trade acquirers in particular, where they're struggling to recruit fully qualified and experienced technical staff. Another area where we expect to see increased activity is public cloud or platform as a service. Here, the recent acquisition by Node4 of Microsoft Azure specialist Visual acts as a clear example, demonstrating the drive towards the European total spend in public cloud of $113 billion. Likewise, as the UK continues to strive towards the PSTN switch-off, infrastructure is going to play a key part, and we're going to see greater consolidation in this space over the next 18 months. Recent moves in this area include the Connexin purchase of Pure Broadband, and also Glide effectively acquiring 85 acres of mixed-use fibre optic real estate in Wembley Park from Quintain through their purchase of Velocity One. In short, the temperature in the lower mid-market remains consistent, but the importance of having a properly structured strategy and being fully prepared for any future transaction remains critical for the success of any future deal. Our advice to shareholders considering their options is to both fully explore and understand the sector specialist advisors available to help guide them on their journey. You should conduct your own due diligence before choosing your advisor, looking into their past transactions, the quality of the advice, and also the rate in which they successfully complete deals on your behalf. The emphasis on due diligence remains the hottest element of any successful transaction, so working with a partner to not only advise you, but properly prepare and guide you through this process is the key part of ensuring you receive maximum value and ultimately exceeding your aspirations.
Evolution Capital is the first UK corporate finance boutique to exclusively focus on providing advice to the ICT sector. We are the leaders in our field. With activities spanning 3 decades, we have provided strategic and transactional advice to over 200 technology entrepreneurs, shareholders and management teams of both privately owned and public companies. We deliver outstanding transactional outcomes by unlocking intrinsic value in our clients' businesses, by providing expert advice based on meticulous analysis and robust methodologies, This is who we are and how we do it.